Let's talk about something that's not in America, Steve, or the UK for once. You've been converting Taiwanese dollars for the last 55 minutes or so. What have you come up with?
I have. They are actually in the US, to be honest with you, and I would put them down, Steve, as my one to be acquiring Intel. I think they buy Intel, they get the foundries, they strap the chip making arm, the chip designing arm, and just give it to who doesn't, whatever. And they say to the US regulators, if you let this through, we'll upgrade all of Intel's fabs, all their sites to their very best. We'll get them working their very best. You get your onshore chip maker of the highest order, so that when China eventually, well, I hope it doesn't, but when China eventually attempts to take Taiwan, which is US's biggest fear, they have chips that they can use onshore. That's my bet. This is TSMC. This was their fourth quarter 24, Steve, and these were very, very impressive results. So net revenue increased 38.8% to, these are all year on year, by the way, to, I'll do it in new Taiwan dollars for 868.46 billion. And converted, that's about 26.3 billion in US. Net income was up 57% to 374.68 billion. That's about 11.37 billion US. Gross margin came in 59%, Steve. That's up 6 percentage points year on year. Operating margin came in at 49%. That's up 7.4% year on year. Net profit margin came in at 43.1%. That's again up 7.4 percentage points year on year. So really impressive quarter for TSMC in terms of revenue, net income, and margin improvement. So there was also a full year 24. So net revenue was up 33.9% year on year for the full year. That was 2.89 trillion new Taiwan dollars. It's about 90 billion to you and me in US, up 30% when you convert it back with the FX impact. Net income, 39.9% up to 1.17 trillion new Taiwan dollars, about 35 billion US. And gross margin was up 56.1%, again up about 1.7 percentage points year on year. Op margin 45.7%, up 3.1 percentage points year on year, and net profit 40.5%, up 1.7 percentage points year on year. So really, really impressive stuff from TSMC. So one of the things that people were worried about was this first quarter, because ASML had hinted that it could be a pretty soft quarter. This ramp up of buying ASML products had just slightly shifted on a little bit. TSMC said no, 25 to 25.8 billion, above the 24.5 billion consensus, and pretty much put to rest worries about this softness due to the GB200 supply chain issues. They said that AI accelerators were in mid-teens percentage of 2024 revenue, but they expect this to double in 2025. For comparison, last April, TSMC was only guiding for AI accelerators to be about 20% of revenue by 2028. So they're thinking like Broadcom's full year 27 AI ASIC chips. They said that this guide is probably going to be informed by talks with hyperscalers and their plans over the next few years. So it's mid-teens. It's already going to double in 2025. So by 2028, it's going to be a lot more than 20% of revenue, you would assume. They reckon it's about 20% revenue CAGR expected through 2024 up to 2028. Notably, they said that it's not just going to be AI accelerators, but also AI driving mobile PC silicon content higher. They said that CapEx next year is going to be between 38 and 42 billion US. Consensus was 36 billion. It's a good thing for somebody like ASML and the other semi-cap providers. And they said that silicon photonics will see a volume ramp in the next 1 to 1.5 years. And they think this is, the analysts think this is due to NVIDIA's Rubin chip system, which is coming down the line. They think that this process is for this. So if that gives you, as an NVIDIA shareholder, a better idea of when Rubin's coming, I hope that helped. A monster company, Steve. It kind of puts Intel to shame at the moment. Is it something that you think you could pick up?
Since you both started and finished there, let's talk about the relationship between them and Intel for the moment. I saw you offered a net income number for the quarter of 35 billion US dollars. Intel has a market cap of 93 at the moment. It doesn't feel like it's going to take a huge amount for them to take a swing at this one. You're looking at sort of four times that and four times that net income figure, and then you've got a healthy kind of premium over the top. And if you can get that past the US regulators, then I see all the kind of reasons that you're talking about there. There was some talk it could have been Qualcomm after them, but they've gone quiet on this for a moment. The big question I have over Intel is exactly what anyone would want with this business. It's got to be someone though that can find a kind of decent strategic fit, like TSMC in this situation. So that's an interesting idea that I hadn't thought of, but we'll keep an eye on. Growth numbers are pretty strong, aren't they? This is what happens when there's nearly no competition around. Intel on their side versus, I sort of feel like TSMC is probably best off with Intel just where it is right now, but they won't stay there forever. They will either improve or someone will come along eventually. But they're busy posting 49% operating margins as a manufacturer, which is sort of nearly unheard of. It's kind of weird monopoly, almost like territory here. We always think about kind of the ASML and monopoly territory, and to some extent Nvidia, and ignore this part of it because it is the kind of uglier, capital intensive, kind of political risk half of the or part of the value chain. Here it's the bit that people don't do because they don't want to. They spin their manufacturing facilities to become more kind of capital light, but a good capital intensive manufacturing thing can still have a massive moat around it. And there are more than healthy margins here for TSMC. I'm not sure I quite see my way into buying it here just at the moment, but I did think it was an impressive. I thought it was very impressive. Response largely another kind of similar vibes to Nvidia in terms of AI driven, hyperscaler driven. These things are unlikely to run out of money, and it feels like to some extent, whoever it is that comes out with the next great chip, Nvidia or whoever, it starts to kind of bottleneck back down again. So it all kind of comes out of ASML to start with, and it all kind of finishes off with TSMC, which is a really interestingly positioned outfit. Although, looking at sort of 30 times earnings back, 20 going forwards, I think I'd rather prefer ASML at today's prices.
Yeah, I think I could get on board with that, Steve, as well. Have you had a look at the market cap, or do you want a quick market cap show game?
Of Taiwan Semi?
Mm-hmm.
Yeah, I had a look, around $1 trillion or so.
Yeah, just under $1 trillion at the moment. I think it's about 916 billion last time I looked. So it's very much on its way by the seams of it to be the next $1 trillion outfit. Don't be surprised if it gets there this year. It's only a 10% move from here. I see you say only, but stocks are moving like crazy at the moment on good earnings, and it's not beyond this company to produce a full year of them. So yeah, really impressive from Taiwan Semi. I think this did we own this at one point? I feel like we both had a really good look at this, or but I feel like it was like $40 or something like that at the time, and we were just so unsure about. I wonder if it was one of the times just before we were unsure if it was going to get moved out the ISA, because I wonder if it was incorrectly listed. But yeah, I remember having a good look at this one and thinking, it's just going to get moved out. I'll just skip it, and that was probably an error.
I owned it third hand indirectly at one point via Berkshire, and Buffett was buying it quite heavy at one point and then went into selling it all in a hurry. Basically, it was looking like it was going to be kind of well up there with the kind of American Express sized investments and the Coke sized investments and TSMC up there alongside them. And you could sort of understand why. If you're prepared to look past the kind of big obvious risk, I'm not saying you should be, but if you're prepared to look past the big obvious risk of, political risk, basically, then plenty to like about this from an investment perspective. And it's not the same thing quite as one of these kind of VIE structured entities. And then everything went into reverse, and Buffett sold the thing, and Berkshire backed away, and he cited as his reason didn't like its position in Taiwan, which hadn't obviously changed, particularly. Which makes it sound like that can't possibly be the reason here. Something happened somewhere along the way that maybe we'll never know. But something odd happened with that, and I haven't really looked at it very much since. But it's maybe the lesson from this is more the case that solid manufacturing, capital-intensive stuff can be pretty kind of moaty when the competition's limited, and you can get very good operating margins out of this. Stick to US railroads, in my case, I guess, for a similar comparison.
Yeah, I've just got this image in my head of Buffett going in one day and getting, I can't remember the guy's name who buys the stocks, but he's just saying, "Oh, what did Todd buy yesterday?" And he sort of brings him up and he's like, "Oh, he bought this Taiwanese semiconductor manufacturing company." And then he sort of looked up and Buffett wasn't there, and he was whacking Todd with his slipper. "We don't buy Taiwanese companies; get it sold." That's the image I have in my head. But yeah, Steve. I don't know. I feel like Buffett's probably missed out there on what is a fantastic company.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.